So what's the one thing that separates the world's best traders from, well, everyone else? It's not some crazy secret indicator they paid $1 million for. It's their ability to see what's actually happening inside the market in real time. Today, we're going to pull back that curtain and look at their secret weapon, order flow.
And Ty, don't just take my word for it. A verified seven-figure pro trader, Carmine Rosado, he put it perfectly. He said, if I trade without order flow, I'm trading blindly. I mean, think about that. When a trader at that level says he feels blind without a tool, you know it's something special. This isn't just another line on your chart. This is like going from a flat 2D map to a full 3D view of the market's battlefield. Most of us learn to see the market through candlestick charts, and they're great, but they only show you what happened. Price went up, price went down. That's it. Order flow, though, it's totally different. It reveals the why. It lets you see the raw, unfiltered buy and sell pressure, the actual transactions that are building those candles in the first place. You literally get to read the story behind the price. Now, to really, truly get this, you have to stop thinking of the market as just a squiggly line on a chart. You have to see it for what it really is, a giant, nonstop auction. Seriously, once you understand the simple back and forth of an auction, all the so-called complexities of order flow suddenly become crystal clear. So what is it really? At its core, order flow is just that, the live stream of every single buy and sell order hitting the market. It's not a prediction. It's a live broadcast of the actions and, more importantly, the intentions of every single participant, from the smallest retail trader to the biggest banks. It's the raw data, and that's where the real edge is found. So in this giant auction, you really only got two types of players. First, you have the passive participants. These are the traders using limit orders. They're kind of chilling out, saying, hey, I'm willing to buy if the price comes down to this level, or I'll sell at that price up there. They wait patiently, they add liquidity, and then you have the aggressive participants. These guys use market orders. They are slamming the buy or sell button, screaming, I want in right now. They don't wait for the price to come to them. They go and take whatever price is available. And this, right here, is probably the most important thing to understand. Those passive orders, they create the walls of supply and demand, but it's the aggressive orders that actually push the price around. Aggression signals urgency. It signals real intention. So our job as traders trying to use this info is to become detectives and figure out who's being aggressive and which side are they on. Let's make this super, super simple. Imagine a house is for sale for $100,000. That's your passive seller. You come along and you offer $90,000. You're a passive buyer. Right now, nothing's happening, right? You're just staring at each other. For a sale to happen, someone's got to get aggressive. If the seller panics and says, fine, I'll take $90K, they just became aggressive and hit your bid. The market price for that house just went down. But if you get impatient and say, okay, I'll pay the full $100K, you just became aggressive and paid their ask. The price moved up. That's it. That's literally all that's happening millions of times a second in every market. Okay, so the theory makes sense, but how do we actually use this stuff to make better trades? This is where it gets really fun and practical. We're going to look at 3 key patterns that tell you the story of what the big players are doing behind the scenes. We're going to zero in on these 3 things: spotting these massive walls of passive orders, also called liquidity, identifying when someone is absorbing a ton of aggression, and, my favorite, uncovering that classic institutional trap called the stop hunt. All right, first up, a wall. This is when you see a gigantic number of passive limit orders all stacked up at one single price. It's like a giant has drawn a line in the sand. Think of it like seeing a huge brick wall of support or resistance before it ever shows up on your chart. It gives you a massive heads up that a major battle is about to go down right at that price. Now for my favorite pattern, mostly because it answers a question that used to drive me absolutely crazy when I just looked at charts. I bet you've seen this too. You see a candle with just an insane amount of volume, but the price just stops. It goes nowhere. It's just stuck in the mud. What on earth is going on there? What's happening is absorption. It means some massive passive player, an institution, a bank, is just sitting there silently soaking up every single aggressive order that gets thrown at them, like a giant sponge. I mean, imagine thousands of contracts being sold aggressively into a level, but some huge buyer is just calmly taking it all, not letting the price budge one bit. That is a massive clue. Someone powerful is defending that level, and a huge reversal is probably right around the corner. And finally, the infamous stop hunt. This is the classic sneaky move by the big institutions. Think about it. If a hedge fund wants to buy a massive position, they need a ton of people willing to sell to them. So, what's the easiest way to find sellers? They engineer a sharp, sudden move down to trigger all the obvious stop-loss orders below a key level. This creates a flash flood of panic selling that they can quietly buy into. So here's the playbook. First, the market gets quiet. It consolidates. Then, all of a sudden, bam, price breaks below that range. Retail traders see the breakdown and they panic sell, or their stops get hit. This is exactly what the institutions wanted. They step in and become the quiet buyers for all that panic. And then, just as fast as it dropped, the market rips back up, leaving all those sellers completely trapped as the real move begins. Order flow lets you see this entire trap play out in real time. All right, let's stop talking theory and see how this works in the real world, with real money on the line. This is a step-by-step breakdown of an actual trade where reading a stop hunt with order flow led to a pretty massive win. And the result? A $35,000 profit from one trade. Now, this wasn't a lucky guess. This was the direct result of understanding the story the market was telling through the flow of its orders. This is the kind of potential we're talking about. Okay, so here's the setup. The market was trading sideways, just consolidating right above the previous day's low. This is a super obvious level, right? Every trader and their brother is watching it. They're all putting their stop losses just underneath it. It's basically the perfect hunting ground for big money. And then the trap is sprung. Price smashes through that previous day's low. If you're just looking at a normal chart, this looks like a disaster, a massive breakdown. But the order flow is telling a completely different story. It showed a tidal wave of aggressive selling coming in, but the price, it just stopped dead in its tracks. It wouldn't go any lower. This was classic absorption. A giant passive buyer was just sitting there, eating up all of that selling pressure. The final piece of the puzzle came just moments later when the market snapped back and instantly reclaimed that low. That was the signal. That was the confirmation that the breakdown was totally fake. All those sellers were now trapped underwater, and you know what they have to do to get out? They have to buy. Their panic buying becomes the rocket fuel for the real move higher, and that was the entry. And here is where you really see the magic. If you had waited for a big, obvious green candle to confirm the reversal, sure, you might have gotten in, maybe for a decent 2-to-1 risk-reward. But by reading the order flow and seeing that absorption happening live, the entry was right at the bottom of the move. This created an absolutely insane 8-to-1 risk-to-reward opportunity. It's just a better entry with way less risk and way more potential profit. So let's wrap this up. What does all of this mean for you and your trading? It means adding a layer of incredible conviction to whatever strategy you're already running. This isn't about throwing out what works for you. It's about making it 10 times better. When it comes down to it, using order flow just gives you way more confidence because you're not just guessing. You can see the reason for a move. This naturally leads to better, more precise entries, which means higher risk to reward potential. And seriously, the best part is it works with anything. If you trade smart money concepts or ICT or just simple supply and demand, imagine seeing your setup form and then watching order flow show you in real time huge institutional absorption happening right at your order block. That's the ultimate confirmation. It's the conviction you need to pull the trigger. So I'll just leave you with this one question to think about. Are you happy just watching the shadows on the wall, the candlestick chart? Or do you want to turn around and see the actual battle, the real forces of buying and selling that are creating those shadows in the first place? That's the difference order flow makes.